Aloha, boys. What's up, Mark?
Morning, guys. Good to be back.
Skyler, what's happening, brother?
What's up, Chad? Aloha, man. How's it going?
Aloha. Looks nice and cloudy over there by you.
I know. Well, I don't know, man. I think that during the times when it gets really hot, like during the days, it's kind of like, it's a little overcast in the mornings, and then it burns off and just gets like blazing. Like our house is in direct line of fire of just super, super hot afternoon sun. So, yeah, I'm taking advantage of this morning right now being outside.
Chad, we should all wear hats in memory, or I should say, in celebration of Tatis. What, four straight games with a grand slam?
Well, the Padres, Tatis had one of the Grand Slams. Hosmer had one.
Machado
had one. And then one other. Who else had the fourth one? But yeah, we had 4 in a row.
So what was the story behind I'm sorry for the grand slam? He had to apologize to the other manager or something?
No, so what happened was we were ahead 10-3, and it was a 3-0 pitch. And so they told him just not to swing on it, like basically just take the walk. And it would have been 11-3 because they would have walked in a run, but he threw one in just right over the plate, and Tatis just jacked it.
Oh, my God.
I'm like, dude, but you know what? If he wouldn't have hit that grand slam, we wouldn't have had the record.
Right, true. That's a good point.
We wouldn't have had the four game record anyway. And like, It's fucking sports, man. You can't apologize.
No, and that's the way those guys are wired. You know, they don't
fucking suffer until the end of the game, dude. The Rangers were just sorry Sally losers. And they got swept 4 games to nothing.
It's so cool now. You got baseball, you got basketball playoffs, hockey. Hockey is real. I don't know if you guys like hockey, but man, right now it's a lot of fun. The Stanley Cup is cool.
Yeah, it is.
I want to get more into hockey. I know that it's a really exciting game.
Right now, I mean, anytime you got the playoffs, Skyler, it can be one of the best playoffs in sports.
So, Mark, we were just chatting before this, and couple of the things that came up was what the rates are doing and the public's perception of what they're doing and all that. You've been slammed. Speaking of grand slams, you've been slammed lately with refis and purchases and everything else because of the interest rates. What's going on with all that? Because I think people do genuinely want to know from
so a couple of weeks back. Yeah, a couple of weeks back, Fannie Mae and Freddie Mac announced nationally that rates on refis would be going up by 50 basis points on any loans that close after September 1. So there's been a crazy rush to get, people locked in, not because they're going to close before September 1, but because our bank was only affecting these rates by 25 basis points until today. So we've been extremely busy as we've had a ton of refi business.
So I want to preface something really quick. When we talk about basis points, for the folks who aren't really familiar with what that means, it's basically a percentage of a percent, right?
Yeah,
so
exactly. Like it's a percentage of the loan amount, and it's not that much. It really isn't. In the big scheme of things, rates are still at all-time lows, but the perception is that they went up, huge. They really didn't.
It is very interesting in that when people hear about deals and prices and things coming down, like, of course, everyone is just like, that's the new baseline. Right? Like
exactly. It's the new norm.
Yeah, like the new baseline is up to 2 and I don't know what 7/8 is like that's where we're at now, and so anything that goes over that, you're like, oh man, like you get all bummed.
Crazy.
It's like come on, it's still ridiculously low,
I know.
So 50 basis points means 0.5%, so it's 1/2 of 100.
Exactly.
So 1% would be 100 basis points, and then 0.5% would be 50 basis points. So,
exactly. Correct.
So it sounds like in the last couple of weeks, or I guess last week when they actually announced it, this week that we've just had, there's still been the opportunity to jump in and get something that's only 25 basis points from that increase. right?
With us, a lot of lenders weren't doing that. We did that because we were working with a lot of folks and we wanted to obviously be able to help them and capture as much business as we could, leading into this.
So if someone comes to you today, for instance, like, would you still be able to get them that?
Yeah, today is the last day.
Everybody call Mark.
Yeah,
Right.
right. Yeah.
Timing is great.
Speaking of that, Mark, Skyler and I were talking about timing on refis and timing on purchases. I think a lot of past clients have called me, hey, who's your preferred lender these days? These are people from years past that haven't refied. I've sent a lot of people your way to do refis. Is the timing on refis and purchases the same? Because I've heard that refis are taking a kind of a back seat to purchases because you guys are so busy. Is that right?
Yeah, I mean, purchases are the priority. So we lock refis generally for 75 to 90 days, and they're not taking 3 months. But like I said, our priority is offering the best customer service for both refis and purchases. But right now, with this competitive environment on the purchase side, a lot of times, as you know, in order to win a purchase situation, we're promising 25-day closes. And the only way to accommodate these crazy milestones is to offer, obviously, and give a priority to those purchases.
Right.
But yeah, I mean, we're closing both. Nothing's closing late, but things are crazy.
And then, so let me ask you, Mark, how long does it take, like if someone were to call you today and say, Mark, I need you to do my refi for me, where are we at? How long does the process take from start to finish of, okay, we're going to start?
A lot. Yeah. It really depends a lot on the borrower, Skyler. I mean, if the person is really organized and has a clean file, in other words, they've sent us all their docs. They're very reachable when we're asking for more docs. I would say anywhere from, we just closed one in 30 days, but anywhere from about 45 to 55 days.
Okay. And then what kind of documents do you require when someone is, needing, or what do you need for them to give you if they want to start that refi process?
So you're looking at the basics. You're looking at the tax returns, the W-2s, the bank statements. The really tough part right now is self-employed borrowers. It's really easy with W-2 and pay stubs, but when you're talking about a self-employed borrower, we have to do a P&L, and they're digging a little bit deeper because of COVID. And is this business still viable because of COVID? We're not really going just on the last 2 years of bank statements. So, that whole COVID thing comes into the mix again for everyone. Some W-2 borrowers, their pay's been cut temporarily, and they may be just going back on to 80% pay, or maybe they're at 90% of their normal pay. So the real easy one would be someone that has not had any effects of COVID from a financial standpoint, and they have this paperwork that we're talking about, readily available.
Got it. Interesting. Okay. So then when it comes to like the rates in an approval process, I guess, all of those different pieces of information that they give you, is it like an algorithm that you guys go through to determine whether or not they're eligible for, the lowest rate, or how does that work?
So it has a lot to do with things. It has obviously a lot to do with credit score, a lot to do with LTV, is how much equity they have in this property that they're trying to refi. Are they trying to take cash out? If they're trying to take cash out, that could be a 1/4 point extra in hit as far as that, the rate goes. So there are so many aspects that come into play, and that's why people can't get too caught up with some of the advertising. They'll say, okay, well, I just saw 2.75 and why, how can you do that? Well, it might require a buy down of the rate. A lot of people are taking advantage of these rates because it doesn't take a whole lot to buy discount points and lock in a rate in the mid-2s that they may never have to touch again. Mm-hmm. So, all those different, aspects come into play. But to answer your question, there's, a big part of it is credit score and equity that they have in that property.
Well, you kind of touched on the two things that I was curious about
Yeah.
lately as far as rates go, basis points, timing. Obviously, there's still a lot of multiple offer situations out there. And like you said, trying to get stuff done faster is tougher and tougher. I mean, I actually asked Mark the other day if we could get one done in 25 days. And he's like, yeah, we can do it. We can try, and that's what's having to happen because the rates are still low. Earlier, Skyler, you talked about that. The public's perception is what's interesting to me because once they're down at 2.9, everybody wants to hustle and get refied or get their purchase at 2.9 or 2.875 or whatever they're getting. They're going to go back up. It's only a matter of time. And I think it's like historically when they were at 3.375, I was like, yeah, guys, they're not going to get any, the money's never going to get any cheaper. Well, it got cheaper. And then a couple people have scrambled in to get these refis done. But what's interesting is a lot of things are indicating that they're going to go back up and maybe even by a full point before you know it. And I think people should realize that in the history of mortgage loans, that's still really, really cheap, right? Like my dad was saying, I think the first house he bought was at like the rates back then were like 11 or 12%, and that's, my grandpa was in the real estate business up in Mahalo. Same deal. He says he remembers people getting 19%, 14%. So anything with a 3 in front of it or a 2 in front of it, and even a 4 is like still, pretty cheap. So I think
Absolutely.
The public's perception is what's interesting to me. Skyler, you talked about that earlier, but people remember that even when they jump back up to 3.5, it's like that's still really good.
Yeah, I think that when that does happen, it could have effects on the prices of real estate, right? Because we've become so accustomed to having money and loans be available for pretty inexpensive as far as the interest rate's concerned. And so I think when interest rates do go back up, it's probably going to cause people to pump the brakes on, okay, well, I'm probably not ready to buy a house yet again or an investment property, right? Because it's going to cost more to do that. So it could slow down the housing market. What do you think about that, Chad?
Yeah, I mean, that's sort of how everything ties together and it typically works. So
What does Willie think?
Oh, Willie's here. Do you see him? He just wanted to say hi. He says, Dad, I think the interest rates are great.
Clearly.
And call Marc Datnow.
Yeah. Willie Nelson.
Yeah, I mean, a lot of it, the inventory determines a lot of that too, So the inventory's been low and it's remained low, which creates obviously a higher demand. And with the interest rates being where they're at, it's just going to stay like that. I think if the rates go back up and then the inventory there's more inventory that comes on, well, things are definitely going to shift. So we shall see what happens. For now, it's strong. It's a seller's market. There's a lot of buyers out there. And despite COVID and everything else, there was a little bit of a lull in like May. Mm-hmm. I think that was, this whole thing kind of came out in, March, April, May kind of dipped a little bit. The prices were still good, but the amount of volume of sales was really low. Mm-hmm. And then it kind of has been going up since. So, and like I said, Mark's probably, I talk to you, Mark, at least once, maybe twice a day about whatever we have going on with purchases or refis, mutual clients. And this guy's up at, working at 6:30 in the morning, and I call him at 9:30 at night, and he's still working. 10:30 at night, he's still working. So I think you just got to ride that wave, huh?
It is nuts, and yeah, it is just riding the wave because it could slow down at any point, but there's no letting up right now. I mean, it's really crazy.
Right.
Yeah, if anyone is out there that needs a refi or has considered it but hasn't pulled the trigger yet, today's your day. Today's your day. Today's the day.
What's the date today? August 21st, 2020.
Yeah.
Call the lender, preferably Marc Datnow.
Yeah. But not just that, if you're somewhat in the market for a home, get pre-qualified. You know, I mean, there's so many people that are saying, well, God, the timing looks great, but there's too many it's just too competitive out there. Get pre-qualified, because if you're ready, you're going to be able to strike. And a lot of people aren't ready. They're just kind of waiting on the sidelines, and it's easy to get pre-qualified.
Hey, Mark, one last question was with buyers and people that are purchasing homes, at what point are you guys able to lock their rate, and how long are you able to lock it for?
As soon as we have an address where they're going into escrow. So in other words, as soon as we have an accepted offer, we're locking.
Right. But if people get a pre-approval letter, let's just give so the public understands, 30 days from when they actually pull the trigger on something, they've been searching for a month, they find the place. Obviously, during that time, the rates are going to fluctuate, and that's going to ultimately determine what rate they get on the date they pull the trigger on the house. So that's just something I think people need to keep in mind, that they don't.
Right, and we're in close touch with our borrowers. I mean, obviously it's competitive, but we're also doing, pre-approval letters every time they find a new property, and I'll update the rate at that point. I'll say, hey, you know what, it's actually dipped a bit, or it's gone up a little bit, and that way you keep people involved in real time, because it is a real time situation, and it is fluid.
Right.
I'm going to add one last thing is when someone does get refied, it's important to, at least from my perspective, they're going to have, hopefully by the end of the process, they're going to find out that they're going to be saving, $200, $300, $400, $500 a month. So a lot of times people are like, oh yeah, I'm saving all this money. But for the most part, that money isn't necessarily being, used for something else that could be potentially better for them. So having a plan after that is really important. So I just wanted to, preface that too, because a lot of times
invest that extra $300 or $400 or $500 every month.
Yeah,
it's the way to go.
Yeah, or save it so that you got at least an emergency fund, and then 3 to 6 months of expenses in case COVID happens, and then the rest of it, that's kind of where you decide what you best suited for. So what that money's best suited for. So that's it for me, guys. That's my financial planning spiel.
For Friday.
Yeah.
Thanks
you guys
for joining us
on again.
Yeah.
Thanks, guys. I really appreciate you guys having me on.
Well,
Thanks,
every time you wear a shirt like that, of course we're gonna have you on, buddy. That thing's epic.
Yeah.
That's just for Aloha Fridays.
My wife just purchased this for me a couple weeks ago. She goes, when you're on that Aloha Friday again, I got the right shirt for you.
That shirt's awesome.
She did a good job, man.
Yeah.
Or if you're in Maui.
Yeah, hey, either way, you're winning.
All right, boys.
Cool.
Have a good weekend.
Take care, guys.
See you soon.
Aloha.
Chee!